Let's now put the spotlight on Ashok Leyland. Ashok Leyland yesterday announced that they'll be closing their Switch Mobility UK plant. To talk about this and, of course, other concerns, the bigger concerns around the extent of promoter pledges that were announced yesterday. The promoter entity has created a pledge, I think, worth over 6,000 crores just yesterday. We have Mr. Shenu Agarwal, MD and CEO at Ashok Leyland, joining in. Mr. Agarwal, let's actually start with the news first, which came in yesterday. You announced the consultation process for closing or restructuring of this UK facility. Just tell us what led to this decision, what are the kind of losses this unit was making, and I think you've invested about 2,500 crores so far in this UK facility. So what happens to all that?
Okay, so firstly, thank you for having me. Listen, yesterday, like we announced, that Ashok Leyland had been committed to the UK market for about 15 years now. But in the recent past, what we observed was that the market variations were just too much. And also, we could not come up with a very competitive cost structure to be able to serve the market in the right manner. We had been making losses in the UK for many years now. And after having tried several things, we have taken a decision to start this consultation process, which might lead into cessation of the manufacturing and assembly activities in the UK. Of course, we are not exiting the market. There are two things that we are working on. Firstly, we do want to continue to support our customer base in UK by providing all aftermarket services. And the second thing is also we are trying to identify an alternate location for manufacturing of these products that are that would be destined for UK and for Europe. As far as the losses are concerned, in the recent past, we have been making about 2 to 3 million British pounds of losses every month. Now, the number varies depending on how much orders we have in hand and how much we can fill up our capacity. But that is the broad range between 2 to 3 million pounds per year. And of course, once this consultation process is over, and we have complete clarity as to which way it will go, we think that most of these losses should be behind us now.
Point taken. Mr. Agarwal, if you could talk about the timeline of Switch UK Mobility, the whole consultation process and the total cost you would likely incur.
Yeah, so see, what we are estimating right now, although the final number will come once the consultation process is over, is one-time closure cost would be somewhere around 5 to 10 million pounds.
All right, Mr. Agarwal, for Switch India, as I understand, you are all set to turn EBITDA positive in FY25. By when and how do we see the company turning PAT positive? And if there is any further cash inflow likely?
So yes, like I said, Switch India is expected to be EBITDA positive within FY25, and now FY26 is actually looking much more promising. We have a very large order book in our hand, which is 1,300 plus buses we have orders for. Also, on the overall volume for buses, we think we should be able to treble that in FY26. On LCV also, although last year was the first year of the launch, but we did cross the number of 1,000 units in FY25. So that number we are hoping should also double or more than double in FY26. So it is, Switch India is moving on a very good path. We are focused on bringing this company to PAT break even, so it stands on its own legs, and that we think should happen within next 4 to 6 quarters.
Okay. Mr. Agarwal, at some point in time, considering that you're talking about a lot of the growth expectations here, would you require to raise any money, to perhaps further invest in this business?
Yeah, that is our plan in the medium term. But right now, as you know, the evaluations for the EV businesses are not very good, right? And therefore, and we are not in a hurry to raise any external funds because, like I said, company is doing fairly well. Their cash requirements are minimal, right? We don't foresee any significant amount of equity infusion for Switch India also in the near future. So we are not in a hurry at all. Ashok Leyland balance sheet is very strong. After many years, we are a negative net debt company now, and we hope to improve that situation by end of this quarter and going forward. So yes, but within a 2-3 year time frame, we will decide whether we want to go through a private public placement to raise some funds, or we want to go for straight for IPO.
Absolutely. Mr. Agarwal, last evening, there's been a disclosure of promoter creating pledge of 30 crore shares. I'm asking there's concern in the market regarding the pledge and whether, impacts Ashok Leyland, whether this is for meeting IndusInd Bank's fund requirements. Have you had any communication with the promoter in this regard? What have you heard?
Listen, firstly, I think you are asking the wrong person, but what I would say is that the Hinduja Group has many businesses outside Ashok Leyland, right? And many of these are doing very well. Secondly, I would say that, we are really not privy of the matter as to what is the usage of these funds. But of course, if we get to know more, we'll be very happy to share with you. And finally, I would say that, during various interactions with the promoter, we have found that they are more than committed to the success and growth of Ashok Leyland. Many times we have been into discussions with them as to how Ashok Leyland can move forward in fulfilling its vision of being in the top 10 global CV players. So I can assure you that they are fully behind the company.
All right, Mr. Agarwal, we'll have to see how things pan out for now. But thanks a lot for joining in and speaking to us here on CNBC TV 18. Well, let's get back to the markets then.